Welcome to the Deep Dive, your go-to for breaking down earnings calls into, well, actionable insights.
Glad to be here.
Today, we're diving deep into Jones Soda's second quarter 2025 financials. And there's quite a bit to unpack.
Oh, definitely. A lot going on there.
We've got a pretty significant strategic pivot that's, really redefining the company, and some, frankly, surprising developments brewing in their product pipeline.
Yeah, some interesting stuff.
So our mission today really is to cut through the noise, pull out the most important bits from their call, and help you understand what it all actually means.
Let's do it.
Okay, so let's kick things off with the headline numbers from Jones Soda's Q2. What's the immediate picture?
Right. So for Q2 2025, the GAAP EPS was $0.01.
Okay, positive 1 cent.
Yeah, which is, positive swing.
Yep.
They had a loss of a cent, negative $0.01 the year before. So that looks good on the surface.
They're wee but.
Well, yeah. Revenue for the quarter came in at $3.5 million. And that's actually a 21% decrease year over year.
Yeah.
It was $4.4 million before.
Okay, so EPS up, revenue down. What about gross profit?
Gross profit was $0.8 million. That works out to a gross margin of roughly 22.9%.
23%, basically. Not super high for beverages.
No, it's on the thinner side. But what's really interesting and kind of balances things out a bit is their cost control. Operating expenses were down.
How much down?
Pretty significantly, down 26% year over year. Dropped from $1.5 million to $1.1 million.
Okay, that's substantial.
It is. And that discipline really helped narrow their adjusted EBITDA loss. It came in at negative $0.3 million.
Which is better than before?
Oh, yeah. A 48% improvement compared to the negative $2.7 million loss they had previously.
Got it. But you mentioned that EPS swing was driven by something specific.
Absolutely. We have to be clear on this. The big driver for getting to that positive net income, that 0.01 EPS, was a $3 million pre-tax gain.
From what?
From selling their cannabis beverage business.
Ah, okay. That's the big strategic pivot we mentioned. So less an operational profit surge, more a one-time gain from an asset sale.
Exactly. That gain really paints the headline picture.
So how did the market react? Investors see positive EPS but lower revenue and a big gain from a sale. What was the immediate take?
Surprisingly quiet. August 15th, the day after the release, the stock closed at 0.1870.
Which was?
Basically flat. A tiny 0.1% increase from the day before. And trading volume was actually lower than average.
So no big celebration, no panic either, just muted.
Yeah, the general feel was described as sort of cautiously constructive. People acknowledged the profit swing from the sale, obviously.
You can't ignore $3 million.
Right. But they were still looking at that year-over-year revenue drop. It felt like the market was saying, okay, nice gain, but show us the core business growth.
Exactly. The headline numbers give us the what, but the real story seems to be in the why. That divestiture of the cannabis business, it feels like more than just a balance sheet transaction.
Oh, it absolutely is. This is I'd say, a profound strategic refocus.
Explain that. What does refocusing mean here?
Well, on June 21st, 2025, they closed the deal, sold the cannabis beverage business, got $3.0 million in proceeds, cash, and notes.
And booked that gain we talked about.
And booked that $3.0 million pre-tax gain. But this wasn't just about the money. It was a very deliberate move to sharpen their focus onto their core beverage operations.
Get rid of distractions.
Exactly. And strip out the specific costs tied only to that cannabis segment. It's like classic simplifying to grow, shed an asset to get capital and clarity.
But they didn't exit completely, right? You mentioned HD9.
Correct. Crucially, they kept the brand license and equity rights for their hemp-derived HD9 THC category. They see that as a key future growth driver.
So it's a nuanced exit. Sell the marijuana side, keep the federally legal hemp side.
Precisely. It suggests they're refining their approach within that broader cannabinoid space, not abandoning it.
So it's not just cutting, it's a strategic sharpening. Lots of companies talk about simplifying to grow. What makes this move compelling, or maybe risky, for Jones? Is it a real turnaround plan?
That is the critical question, isn't it?
Yeah.
What's insightful here is how a smaller player, Jones, is using an asset sale to get non-dilutive funding.
Meaning they didn't have to issue more stock.
Right. And they're using that cash to focus their re-entry into potentially high-growth segments. They're trying to prove this isn't just about cutting costs. It's a strategic bet.
A gamble, maybe?
A calculated one. If it works, it could be a blueprint for other small brands fighting giants.
Yeah.
And beyond the sale, management kept hammering operational rigor.
Like what specifically?
Well, they talked about improvements in their supply chain. They fixed that temporary HD9 THC supply issue that actually hurt Q2 sales.
Okay, getting the house in order.
Yeah, and things like rationalizing warehouses, optimizing freight lanes, basically tightening every single operational screw they can find.
So overhauling operations. What does that tightening look like on the product side? How much can that really move the needle in this hyper-competitive market?
Well, product innovation is definitely front and center. Take Pop Jones Zero Cola, launched back in March 2025.
Right, the zero sugar play.
Yeah, it's now in over 10,000 stores. And they're expanding distribution into big national and regional chains, Safeway, Albertsons, a major Midwest chain coming in Q3.
That's significant reach.
It is. And they just added Jones Zero Root Beer. Plus, they're bringing out HD90 Zeros as the THC line and slim cans in Q3 as well.
So leaning heavily into zero sugar across the board makes sense with consumer trends.
Absolutely. They clearly see zero sugar as a massive growth engine, just like the rest of the industry.
What about those collaborations? Tapping into existing fan bases seems like a smart move for a smaller brand.
Totally. Licensed collabs are a big focus. And they've had some genuine hits. Remember the Crayola custom pack?
Vaguely, yeah.
Sold out in hours. And their tie-ins with the Fallout video game franchise Nuka Quantum and A Grape apparently exceeded their expectations.
Wow. Okay, so that's real buzz.
Yeah, and they're doing a limited-time Fallout 2 product direct-to-consumer launch in Q4. These aren't just sales, they're brand builders. They tap into passionate communities.
And the adult beverages, the HD9 side they kept.
Right, the hemp-derived THC. That business brought in $0.8 million in revenue this quarter. Not huge yet, but growing.
Expanding distribution there, too.
Yeah, signed 4 new partners in Q2, expanding into new states, like New Jersey, with a partner called Beverage Group.
And the key there is the hemp-derived part.
Exactly. Management stressed this. Because it's hemp-derived, under 0.3% THC by dry weight, it's federally legal to ship across state lines.
Ah, unlike marijuana products.
Right. So they can sell it in regular stores in states without legal marijuana markets. Much bigger distribution footprint potential. It's a clever regulatory play.
Okay. And then there's Spike Jones, the
Yeah.
alcoholic one.
Yep, they're hard soda. Distribution's mostly been Pacific Northwest, but they're pushing nationally now.
How?
Secured a production partner in Michigan. Signed distribution deals with folks like Griffin and Superior Beverage.
Any new products there?
Yeah, they plan to launch 100-calorie flavors in Q4. Again, hitting that better for you or lighter trend, even in alcohol.
Okay, so lots of moving parts. Operational tweaks, zero sugar push, collabs, hemp THC, hard soda expansion. Given all that, what are they telling investors about growth for the rest of 2025?
They're definitely projecting optimism for the second half. They expect sequential revenue growth.
Quarter-over-quarter growth.
Yes, in both Q3 and Q4.
Driven by what, mainly?
Scaling up those zero sugar products, getting into more club stores, plus continued cost control.
Any specific programs?
Yeah, they mentioned a cooler rollout program specifically for HD9 THC sales, getting their own branded coolers out there.
Ah, controlling the point of sale. Smart.
And landing new customers in club and grocery for their core and modern sodas, plus more license releases.
Are they spending more to make this happen?
They did say anticipate increased marketing spend in Q3 and Q4, especially for Pop Jones. And here's a nugget. They have meetings scheduled August 20th.
With who?
With a Walmart buyer for the modern soda category. They're representing Pop Jones, armed with new flavors and actual in-market sales data.
Wow, okay. Getting into Walmart would be massive.
Huge potential distribution win if that goes well.
All right, this definitely sounds like a company trying hard to reposition itself in a tough market. So let's zoom out. What does all this mean for you, the listener, the potential investor? How should we really frame Jones Soda within that huge beverage landscape?
Well, what's really fascinating, I think, is the clear strategic thinking behind that divestiture. It wasn't just about getting cash.
Right, you said non-dilutive capital.
Exactly. And it gave them a much clearer operational focus. It really is that simplifying to grow idea in action. And the cost control is real lower operating expenses, better adjusted EBITDA. Those are definitely green flags. Yeah, we can't just brush off that Q2 year-over-year revenue drop. It underscores how tough it is to scale their core business. It's a brutally competitive market out there.
And the margins aren't huge.
Right. That roughly 23% gross margin doesn't leave much wiggle room if a price war breaks out or if they need to ramp up promotions heavily.
Which happens all the time in beverages.
All the time. And look at the backdrop. Coke is launching functional sodas, prebiotic stuff. Pepsi just paid nearly $2 billion for Poppi.
$1.95 billion, yeah. Huge bet on that functional space.
Just shows the intensity of the fight for consumer attention and, maybe more importantly, for that physical cooler space in stores. Jones is definitely swimming with sharks.
So their execution needs to be near perfect.
Flawless. Their differentiation has to be crystal clear.
Okay, so looking ahead, say the next 3 to 6 months, what are the key signs, the catalyst we should watch for to see if this pivot is actually working?
Number one, I'd say watch the expansion and the repeat purchase rates for their zero sugar line. Getting shelf space is one thing. Keeping it and getting repeat buys is another.
Velocity matters.
Exactly. Also, success in landing those big club channel placements. Those are high-volume deals. And keep an eye on gross margins. Can they hold or improve them as promotions may be normalized?
And the fun stuff.
Any new licensing deals, especially around the holidays, that generates buzz and can drive surprising volume.
Can we put some numbers on their current performance? How are things actually selling?
Yeah, they gave some specifics. Core single bottles are selling at about $3.23 per SKU, per store, per week.
How does that stack up?
It ranks them third in the craft soda category, which is pretty good. It shows a loyal base. But top craft sodas might do $5, even $10 per store per week. So there's room to grow reach.
Okay, so solid base, needs more reach. What about Pop Jones?
Pop Jones, the modern soda, is doing $29 per SKU per store per week. That ranks at 11th in its category.
And where do they want it to be?
Management's aiming for the top 5. To get there, they probably need to be hitting closer to $50 or $60 per week per store.
Big jump. Explains the push for distribution.
Absolutely. Why they signed those 15 new distributors, expanded into over 800 new convenience stores in Q2 alone. They need more doors.
And you mentioned AI.
Yeah, this is interesting. They're exploring using AI for, quote, low-cost, catchy advertisements to drive vast awareness. A test is planned. Could be a wild card if it works.
Low-cost viral marketing, the dream for a smaller brand.
Pretty much.
Okay, we've dug into the numbers, the strategy. Now let's put on our slightly more speculative hats.
Uh-oh.
This is our not financial advice segment. We pitch an outrageous, maybe, but still plausible trade idea. Think hedge fund analysts pitching the investment committee. And remember, everyone, this is purely for informational fun. Always do your own homework.
Got the disclaimer. Okay.
So what's your boldest yet somehow defensible thesis on Jones Soda right now?
Okay, let's play this out. The market reaction was basically zero, right? Flat. To me, that just screams opportunity hiding in plain sight. Because everyone's fixated on that top-line revenue decline. They're missing the bigger picture, the forest for the trees. This isn't just cutting costs. It's a strategic pivot. There's real optionality here if they execute.
Okay, pitch number 1.
All right. Trade idea 1, the cooler space dominator long.
Intriguing title.
The thesis is simple. Jones Soda is about to weaponize those HD9 coolers. Management specifically talked about a cooler rollout program focused on HD9 product sales. They're placing 850 Jones-branded coolers out there in Q3.
850 isn't a huge number nationwide, but targeted.
Exactly. It's not just about selling more HD9, though. That's part of it. It's about owning the physical real estate in the store, creating brand visibility, driving impulse buys for the entire Jones portfolio sitting in that cooler.
Like a mini billboard right at the decision point.
Precisely. Think about how fought over cooler space is. Jones is trying to carve out its own little high-value corner. Combine that with their solid sell-through for core bottles number 3 and craft, and you could see some real organic velocity kick in.
Okay, what's the wild but plausible angle here?
I think the street is massively underestimating the impact of these dedicated coolers. It's not just a fridge, it's advertising. Especially for HD9, which has that unique interstate distribution advantage. It's a quiet land grab in the beverage aisle that could really surprise people.
So a trade.
Go long Jones Soda common stock. The bet is on a re-rating as these coolers start showing up in Q3 and Q4 sales numbers, boosted by holiday licensed products. The flat market reaction gives you arguably a great entry point.
Okay, long common stock based on cooler real estate. Got it. What's idea number 2?
Trade idea 2, the AI-powered virality catalyst play.
Ah, the AI angle. This sounds more speculative.
It absolutely is. Yeah, but hear me out. CEO Scott Harvey didn't just mention AI. He talked about testing low-cost, catchy advertisements. He actually said, quote, the economics for this really make sense, and they can drive really vast awareness, and the creation of material is really speedy.
Speedy and cheap awareness. The holy grail.
Right. Now, maybe it's just corporate talk, but what if it's not? What if a small, nimble player like Jones actually cracks the code on using AI to create genuinely viral, super cost-effective marketing? Content that drives huge awareness for Pop Jones or the zero sugar stuff, that's a game changer.
Compared to their current marketing.
Yeah, they're doing influencer stuff, geofencing, that's fine, standard. But true AI-driven virality could create exponential reach, nonlinear growth.
So the wild part.
The wild but plausible part is that one really successful viral AI campaign could catapult Pop Jones into that top 5 modern soda ranking way faster than anyone expects. It would totally surprise analysts who are just modeling gradual linear growth.
And the trade for this one?
This is definitely higher risk. I'd propose a small, speculative position in short-dated, out-of-the-money call options on Jones Soda.
Betting on a quick, sharp move up.
Exactly. You're betting on a sudden spike in brand buzz and consumer interest coming from a successful AI marketing test. High risk, potentially high reward. But the key is, the market is pricing in zero upside from AI right now. So if it hits, it's pure alpha.
Okay, two interesting, very different angles there. One grounded in physical retail, the other in digital marketing disruption.
Options for different risk appetites, maybe.
All right, let's try to wrap this up. In summary, Jones Soda's Q2. It was really a quarter defined by that strategic streamlining, wasn't it?
Definitely. Selling the cannabis business profitably, controlling costs tightly.
Revenue is down year over year, that's the headwind. But management seems to be setting the stage for sequential growth in the back half of the year.
Yeah, driven by that core soda innovation, especially zero sugar, the HD9 expansion, and just grinding on operational execution.
And they're actively chasing new distribution, using those licensed partnerships. It really feels like they're trying to prove that less can be more by focusing their efforts.
It really highlights how even smaller companies in these tough consumer markets can find creative ways to use capital, use innovation to try and drive value.
You don't always need massive scale.
Right. It shows strategic moves are possible. But the big question for you, the listener, the astute observer, is this. Are these targeted initiatives, these new marketing angles like AI, are they actually enough?
Enough to cut through the noise.
Exactly. Enough to cut through the noise from Coke, Pepsi, all the others, and really reshape Jones Soda's market position in the next few quarters. Can that focus truly let them outperform the giants?
That is indeed the multi-million-dollar question. A fascinating thought to chew on. And that concludes our deep dive into Jones Soda's Q2 2025 earnings call. Thanks for tuning into the deep dive. As always, we strongly encourage you to do your own homework and research. Disclaimer. The information provided in this deep dive is for informational purposes only and does not constitute financial advice. Investing involves risks, and you should consult with a qualified financial professional before making any investment decisions. The views expressed are those of the hosts and do not reflect the opinions of any other entity.